We are taking stock of earnings, and we have L&T Technologies, which has posted double-digit growth in revenue for the September quarter. All in all, it was a steady quarter for the engineering services firm, but there are analysts who suggest that as far as the outlook is concerned, there could be some concerns. Well, as far as the segmental performance is concerned, we are keeping an eye on the several deal wins, but to take us through how the quarter's gone by and what we can expect going forward, we're in conversation with the Managing Director and CEO Keshab Panda, who joins us on the show. Mr. Panda, good morning and thanks for taking the time out. It's a steady quarter. What's your assessment of the top line given the double-digit growth? Can you tell us a little more about your largest segment, the transportation segment, which did grow as much as 22%? What are the orders here that are working in favor of the segment?
Listen, I think we had a great quarter again, and if you look at it, not only transportation, we have medical, process industries, plant engineering, as well as transportation. All three segments grew 20% year-on-year basis. So I think the advantage we have is the multi-segmental, business segment what we have, we play that very, very well. On the transportation, there are three components. Again, we are very, component like off-highway, truck and off-highway. We have automotive and aerospace. All three segments, the area we are focusing there, I think, has really paid us dividend, and will continue to. The pipeline we have and the order we own in last two quarters, it is going to take us to future growth as well. So we are very bullish about it. All three segments, year-on basis 20% is growth.
So also that your operating margins have seen expansion. What are the factors that are playing in favor of margins, and how has currency played its bit in here?
See, I think operating margin, when you say there are a couple of components there, right? Today, the engineering, what we are doing 3 years ago or 2 years ago is entirely different. The new age technology is playing a very important role. Our investment in the lab and technology like AI for manufacturing, AI for healthcare, artificial intelligence, and I think AI using new age technology into the business, what you do, product to smart product. That's the only way, I think we can continue to grow our business and grow our margin. So that is one thing we did reasonably well. The other part what we did well is operational efficiency, looking at it. I strongly believe engineering services, when you do, there are different components of engineering services. The product design part of it, when it's a component design, system design, these areas, and the other part is called skill-based engineering. Our automation using in the skill-based engineering, that has paid off, and I believe that is going to pay us long run. Number two is new technology in our product. That again has paid dividend on that. And multiple things we did, and we get a gain at the same time. Remember, this quarter is the wage increase quarter for us. 1.6% in impacted wage increase. Consciously, I think we work on that. What are the parameters lever available so that our margin is protected? So in all the together, our operational efficiency plus all this together has paid us, this margin improvement.
Sure, sir. I also actually wanted to know a little more about the kind of conversations that you are having with your clients. Now, there is a lot of uncertainty in the global economy. Have you identified challenges that may impact the company going forward, or do you think that everything remains intact because there were concerns with respect to your guidance going in?
No, it is. I cannot say that whatever may be economy, our business is, protect that. That's not true. But the fact of the matter is, I strongly believe, economy slow down, trade war with India and China and the US is a big thing. And what is happening in Saudi Arabia, everywhere, I think we are clear. But what we know for sure, not today, this is not the only quarter, consistently we have been doing well for last 10 quarters and beyond. So we believe what we control and that we should execute well. And I believe we can do growth and delivery with the engineering heritage we come from and the investment we made in lab and people, there's no reason why we can continue to grow. Is there a problem? Yes, decision making delay that happening because of economic struggle. This, I can't say that nothing is happening in the world. That is have some impact. There is a slowdown in terms of decision making will have some impact. I still believe this is not going to be a long term. If it happens, depending on what percentage of growth you are going to have, that is one of the reasons we always clear about what I know. My investor and the public should know about it, and we are very careful about it, and that we communicate.
So a final question, a quick one here. Your deal wins are largely in the automotive, medical, and the plant engineering firms and sectors. How is the order pipeline looking to you?
Pipeline looks reasonably good. We had last 2 quarters, we had a sizable win, and we continue to do that. But let me clarify, this is deal wins not only in automotive, and we had every 5 segment there are deal wins. If I look at the 8 wins we had this quarter, out of 8, it distributed all 5 segments, not just one segment. It is, we had, even though telecom, high tech, what we have gone through, semiconductor difficulty we have gone through, but there are sizable deals we own here. Only thing is how long it takes to start, have the employees and we start billing it. That's a question. But I think there is a growth in this segment as well. Deal wins this segment as well.
Okay, Mr. Panda, we'll leave it at that. Thank you so much for joining us and talking to us here on BloombergQuint.